Most indicators are useless. But this one took me from losing money every single week to making multiple five figures a month consistently. And it's not something that generates signals or crowds your entire chart until it's completely unreadable. Because we all know those don't work. This is something that actually makes you a better trader and gets you real results. If you can understand how to read it the way I do, you'll have the market in your back pocket every single day. So focus for the next few minutes, and I'm going to break down exactly how it works and how you can use it to immediately skyrocket your gains. Here's the thing. Most indicators don't actually help you trade better. They just tell you what already happened. They either lag behind the price and force you to enter late, or they try to predict the price too early. But in any case, if any of these actually worked, we'd all just be following indicators, right? But they don't. And they lie to you just enough to keep you hooked, hoping that one day you'll get better at using the indicator and beat the randomness of the market. But that day never comes. You stay stuck at break even or burning money every month. And worst of all, you ruin what your potential profit would have been if you were trading properly. But the EMA cloud is different. It doesn't spit out signals and it doesn't pretend to predict anything. What it does is give you a read on structure, strength, and pressure in real time. And this is absolutely critical. Once you read this right, you'll know exactly how to spot a high-quality environment in seconds. You can open a chart and know whether you'll enter a trade or not, and which direction to take that trade, just based on a few seconds of looking at the cloud. And that's the beauty of it. Indicators give you mediocre signals, which obviously don't work. Now, what a lot of traders do instead is to just trade pure price action. This can theoretically work, but it's an uphill battle. You're trying to read candlesticks, which are very random and unpredictable by nature. And you need to be on your screen all the time. You'll be constantly grinding for a bit of profit and exhausting yourself. Unfortunately, the majority of traders find themselves in one of these two camps. They first realize that trading using indicators is unprofitable, then realize they need to make a shift and use their own skills rather than rely on some signal. This is a step in the right direction, but unfortunately most get stuck in the price action grind and exhaust themselves, often for just a little profit at best, and multiple blown accounts at worst. In fact, I made a whole video explaining why price action doesn't work, and what I do now instead that's way more profitable. I'll link that here for you to watch later. So indicators don't work, and price action probably won't work. So, is it just a skill issue? Do you need to be some highly skilled price action genius to finally be profitable? Well, no. In fact, most highly profitable traders aren't any better at reading the market than unprofitable traders. If they had to look at a random chart and guess the direction over and over, they would probably get similar results. Trading doesn't need to be hard. There's a third option, which is adding the EMA cloud over current market structure to get an instantly clear view of trend and momentum. And that simplifies things the way an indicator does. But it's there to assist you, not hold your hand and make decisions for you. That's where things get simple. And when they get simple, they get highly lucrative. The beauty of the EMA cloud is that it's the simplest possible indicator you can think of, which is the exponential moving average. It's just the 20 exponential moving average and the 50 exponential moving average, with the area shaded in between. The 20 EMA is just a line that tracks the average price over the last 20 candles, but it gives more weight to the most recent ones. So if price has been grinding up steadily for the last 20 bars, the 20 EMA will slope upward and hug the price. If price is dropping, it'll start tilting down. It's like a pressure gauge. It reacts fast, not to one candle, but to consistent movement. So when it starts bending, it's telling you, hey, momentum's shifting. The 50 EMA is the same concept, but it tracks the average price over the last 50 candles. Since it's tracking the average price of more candles, it moves slower and reacts to changes less suddenly. So when you combine these two, you get a very accurate read of the trend and momentum, and it becomes easy to understand the market. When it comes to reading the cloud, there are three things you want to pay attention to. One is the slope, two is the distance from price, and three is the price's reaction to it. You don't need to memorize these or take out a notepad every time you trade. The more you observe the cloud, the more it'll come naturally to you. It only takes me a few seconds at this point to know exactly what the market is doing using the cloud. So the slope is the direction at which the EMAs are pointing in. If the price is trending up, the cloud will also be sloping up since it follows the price, and vice versa if it's in a downtrend. If the cloud is flat or looking choppy, it means we're in a range. I usually don't engage when the cloud is flat, because it's way less predictable and price action is a lot more random. You can lose your mind trying to figure a range out. What we want is a strong trending move, because it means that one side is more likely to continue working than the other side. So make sure the cloud is trending before engaging with the market, and you can determine this in just a few seconds by looking at the cloud. If the cloud is not trending, it's probably not a good time to engage. Now, once we've determined our slope, we can move on to distance from the price. So the cloud is kind of like an elastic. It can be stretched a little, but if it gets stretched too far, it'll snap back. The same concept applies to the price. If it explodes too quickly or suddenly, the cloud will slope up naturally. It just follows the price. But it doesn't mean we should go long. The cloud acts as a natural support for the price. It's like a dynamic support and resistance. In a healthy uptrend, the price moves in waves. It'll have an impulsive move upward and then a pullback, and then another impulsive move and a pullback. This is because the market can't just go up or down in a straight line. It needs structure and liquidity from both buyers and sellers to support it. And if it does seem like it's going up or down in a straight line, it's probably not going to last long. If the price is too far from the cloud, it's usually not a good entry point. It's best to enter once the price is near the cloud, not when it's far away. And if it is, it's probably best to wait for the price to get near the cloud again. It'll either pull back or consolidate, which will give the cloud enough time to catch up and give you a stronger entry. So you want the cloud to be trending, but not too strong or sharp, because that means the price has overextended itself and it's not a good entry. And the last thing you want to look for is the price's reaction to the cloud. Once the cloud is trending and price is generally near the cloud, you want to see how the price reacts to the cloud. Does it test and bounce off it? If it does, that's a super strong indication that we have at least one more trend leg. But if it starts cutting through the cloud or just generally doesn't respect it, that's when you need to be more cautious. That probably means the move will fail, or at the very least retrace deeply before continuing. Either way, you don't want to be in the trade at the moment because you don't want to find out. You want a clear signal before entering. And the strongest signals come when the price respects the cloud by bouncing off it. So that's exactly how you assess the quality of the market and decide whether you'll enter a trade or not. You want the cloud to be trending. It doesn't matter which direction, as long as it's trending. Then you want to assess how far the price is from the cloud. We want the cloud to be hugging the price. If the price is too far, it means we're probably overextended and it's not a good entry. And last, you want to make sure the price is respecting the cloud and reacts to it properly. Now, the last thing you want to look for is lower and higher time frame alignment. You want to make sure that the cloud on both the higher and lower time frame agree. The lower time frame, like the 5-minute for example, should have the same direction overall as the higher time frame, like the 30-minute or the 1 hour. If, for example, the 1 hour is sloping up and the 5-minute is sloping down, it could indicate the start of a potential reversal. Or it could also mean a deep pullback before moving back in the same direction. But either way, you don't want to guess. You want probability aligned to one side for the highest quality trades. So that's what you should keep in mind. You want the higher and lower time frames trending and both aligned. If you're looking for a reversal instead of a trend continuation, you want to see the higher time frame overextended and the lower time frame to be flipping against the trend. This puts reversal pressure on both time frames. That's how you use the cloud to accurately assess the market in every condition and know exactly how you should trade it. Now, in terms of actual entries and exits, it's pretty simple. We use supply and demand levels as both accurate entry points and exit points. Once the cloud is pointing in a certain direction and aligns on all time frames, all we need to do is wait for it to enter a level and exit at the next level for a clean level-to-level trade. And that's how we use this indicator with the highest level of profitability. Rather than trying to take mediocre signals from other indicators or trying to understand raw price action, we can accurately read the market in seconds and take the right trade. By the way, you can work with me one-on-one to trade this exact system. We'll build you a custom trading plan, have weekly calls, a private chat, and access to my exact chart. If you're interested, click the link below. And if you found this video helpful, drop a like and hit subscribe, because I post videos like this every week. See you in the next one.